Beautiful. Well, thank you so much, three of you, for being here. I thought maybe what we can do is we'll just start off with like who's who in the zoo. What's a little bit about each of you and your funds. So maybe we can start with you, Rene, and we'll go next and next. So really want to just understand. Actually, would be really helpful as well is to get a little bit of your background as well, because I know that contributes to the conversation about the fund as well. So yeah, stage, check size, what you're looking for, that sort of thing.
Okay. Well, it's a pleasure to be here. We are Fundracer, a new created investment fund, investing in micromobility, obviously, that we're here. We invest early stage, so pre-rev or just early rev, hardware, software companies, check size between $500,000 and $2 million. We focus mainly on safety, last mile and performance segments. And I think the uniqueness of the fund is that it's founded by 3 ex-bike entrepreneurs. So myself, I am the creator of 3T.Bike. It's a high-end gravel bike company in Italy that I bought in 2007. I grew it and I exited in 2023. And my 2 partners are the founder of Cervelo Bikes that he sold to the Pond Group in the Netherlands, and Andy Ording, he's based in the US. He's the founder of Zip Wheels, and he sold it to SRAM. And with the 3 of us, we are now the GPs of the fund, and we are looking for investments in the early stage companies where we not only invest capital, but we take an active role, and we use our network in terms of customer base and in terms of sourcing base and in terms of strategy go-to-market to help startups to go to market and to scale rapidly globally, because we are based in US and in Europe.
Fantastic. Thank you very much. Awesome. All right, Nassin.
Thank you. Well, first of all, it's a pleasure to be here with you all today. I'm Nassin Watson. I work for Challenge Works, which is a social enterprise, and we specialize in running open innovation challenges or challenge prizes. And these are basically competitions where we incentivize and we support innovators to enable them to develop solutions to solve various problems. Up to date, we've run 90 different challenges, and we awarded up to £156 million to our winning innovators. Right now, the most relevant opportunity that we have open is the Sustainable Cities Challenge, and we're running that with the Toyota Mobility Foundation. And we're working with different cities. So we have 3 different cities with $3 million available in funding per city. So really excited to talk more about that and more about open innovation challenges more in general.
Awesome. Thank you very much. And Thijn.
Yeah, so also thanks for having me. Nice to be here. My name is Thijn, so I'm one of the partners at Nassin Ventures. Nassin Ventures is a Series A investor, and we're sector agnostic. So we invest in companies, tickets 2 to 8 million, but it can be anything. So it can be mobility, but it can also be non-mobility. I think what sets us apart a bit is that we are a deal-by-deal investor, and that means that instead of having a fund that we passively invest from, on an individual basis, we go to our investors and we ask, hey, who do you want to participate or not? And then they can decide, yes, I want to do this one, or no, I don't want to do this one. Then we set up an SPV, and so an entity, and through that entity we invest. And what we always say is, why is that good? That's because you get sort of the advantage of angel investing, where our investors specifically chose for the ventures that we invest in, so they are way more likely to help out, to support, but you don't have to worry a cap table. So you just have to deal with us like a typical VC.
Yep.
And we've done 2 mobility investments. Our last investment was mobility investment in Magic Lane. So they built location intelligence solutions for micromobility specifically, actually.
Yes, and you can see them just out here to the right.
Yeah, it's on the right. So, so if you're a mobility company looking for navigation, then go to talk to those guys. And we've also invested in GoBooney, which recently merged with Jess Kappa, and they're now the largest motorhome rental peer-to-peer platform.
Excellent. Okay, and can you reveal any of the investments that you've done to date?
I can't reveal that. We are going to close 2 this week. So by the end of the week, I'm able to announce.
Okay. All right. Brilliant. Well, look, I want to kind of set the context for this conversation, which is like the history of micromobility is that I think certainly like the early days of this were from 2001 when Yamaha started making electric bikes, and then we ended up with kind of combination of lots of different business models coming together in 2015, 2016 with the Chinese bike share boom, where you started having bikes being enabled to be internet unlocked, et cetera, and then subsequently the real boom, which is where I think micromobility's got started, was around the shared scooter business, which was really 2018, 2019, 2020. And then subsequently, like, huge amounts of capital have flowed into that space. Unfortunately, I don't think the public market performance of Helviz and Bird, who have subsequently gone public in that period, have been particularly good. But what we've definitely seen is that there have been other business models that have really popped up, and we've got the kind of continuing innovation of the vehicles. And so the big ones that I've seen in the last couple of years have been the kind of subscription model business models have really come up, like delivery models have really come up, and then there's been specific bikes as well. So like Van Moof and Cowboy obviously managed to raise it really high levels of valuation as well. Some of that hasn't gone super well. So I think like what we've seen is this kind of boom bust dynamic to the industry, and yet at the same time we've seen huge amounts of growth of the underlying vehicles, right? Like more people are riding e-bikes now than ever. More than 50% of the sales in the Netherlands are now e-bikes. I think, those are that's the broad context in which we're looking at this. And obviously risk capital has been coming in. Some of it's done well, some of it hasn't. I want to also, Thijn, I know that like for you've obviously been thinking about this a lot. I thought maybe, can you give a little bit of context in addition to obviously these dynamics in the market? What are the other kind of macro factors that I think a lot of VCs who have come to the space have been looking at, and how do they compare it?
Yeah, sure. So I think, and I, by the way, I think I fully agree with sort of the bigger long-term trends that you sort of sketch, right? I think the world has sort of come to realize that sort of the trends, urbanization, the trends to, mobility becoming smaller, micromobility, shared mobility, in the long term, this is all going. So I'm pretty optimistic in the long term, sort of what we're all working on, where this is going. But I think it's good that sort of in maybe the midterm to sort of look at some other macro factors that are really influencing how investors, or at least how we are now sort of making our decisions as well. And I think a couple of things to take into account is first, and I think this is a very European thing going on, but I think Europe is really waking up to sort of the realization that also Europe needs to be sort of an independent block in the global space. US is really pulling all protectionism barriers. China's doing the same. So I think Europe will be next. And that has both positive and sort of negative consequences, because I think it will mean as a startup that you need to think about sort of, okay, if my supply chain reaches further than Europe, then, that might be trickier, both to attract funds, or maybe I need to deal with it. On the positive side, it also means that a lot more money is flowing into companies that maybe are sort of embracing made in Europe, built in Europe. A lot of public money from the EU is flowing into the industry. Defense is a big topic. So in the short term, that means there's a lot of sort of public money available that is also more and more available for startups, I think. And in the mid to the long term, that will also trickle down, I think, into the funds. So I think also the European investing space will also benefit from that. And I think another factor, and I think it's always on everybody's mind, but certainly on VC investors' mind, is AI. And I think AI influences sort of investment decisions in two ways. On the one hand, I think AI enables a lot of startups to bring a lot of product innovation with very scarce resources if you do it well. Yep. So suddenly there are lots of good products out there, lots of AI-based good products out there. So that means that differentiation is harder. But if you have a unique edge of distribution, so how am I selling my product, then you can really fly.
Yeah.
It also makes it very hard to sort of differentiate good from the bad. So.
Totally. Yeah, I've been seeing that too.
Yeah.
Look, I know that there are probably some founders in the audience who are thinking about, hey, I want to get my company funded. I know certainly that's been one of the things that I've picked up when I've been at these conferences. Is I just get approached by a lot of startups who are interested in getting funding. I think one of the parts that I don't think we've oftentimes done particularly well at Micromobility Industries and thinking about this is what is required for companies who are doing company or capital allocation to be able to really what are the factors that are driving them? And actually, if I may, Rene, I'd love for you to just explain how you think about portfolio construction for your fund, which is obviously, what do you need to see from a company who's about to come to you for a raise? If you could start there and just a 1 minute kind of broad breakdown of what you need to see at this point.
Want to see a team that is open to feedback. That is very important in the way we work, because we work actively with the founders. What is also very important is that we see a clear road to profitability. I'm going to talk about we invest mainly in hardware companies, so we don't want to see a plan where there's a plan for a race for the next 10 years. We want to see a route to profitability in a relatively short time. And it's also the stage where we invest is just pre-rev or just early rev. We would like to see in the relatively short term that there is a revenue opportunity.
Yep.
And those companies are getting funding at the moment.
Yeah, excellent. Okay. Well, I thought Thijn, I mean, obviously you're thinking about this as well. You run a fund. Is there anything else that you would add as extra color?
I agree with a lot with what Rene is saying. I think it's just very important to. I think sort of the days of cheap money or free money are a bit over. So that just forces all the startup founders to really think, how am I actually building my business? How am I actually delivering value? Which solutions am I actually tackling? And it sounds like sort of corny catchphrases that you can Google, but I think there's also some truth to it. Like if you can show an investor, hey, I'm actually solving a real problem. I have the data to back that up.
Yeah.
I'm everybody, as I said, is worried about AI. So if you can show why you're not getting disrupted by GPT-5, which will probably launch in 6 to 9 months, but why AI is actually helping you, that helps. If you then can show me an impact angle, because I think it's also good to realize that even the non-impact investors, no, so it's not necessarily an impact investor, but everybody has to deal with LPs, the investors that lend the money to the VCs, that are more and more impact conscious. So if you have an angle that just makes your proposition a lot better, and then, yes, solving real solutions. I think 2 years ago, you saw many e-bike brands popping up, like EV was the trend, so EV was enough.
Yeah.
EV is not enough anymore.
No.
You need to build something on top of that.
Yeah. I certainly see the space at the moment as being kind of went through a period of being incredibly sexy, and you will know now it's like the most unsexy space, I think. It's certainly not like there's certainly not a huge amount of capital that's sitting there waiting to deploy into micromobility as I've seen it. So in that regard, I actually wanted to ask you, each of you three, like what is the stuff that you're most excited about at the moment? Like which like if you could point to specific investments, or if not specific investments, what are the sort of like very, very, very interesting things for you? And I want to ask, obviously, you're from a fund perspective, and then for you, you're out there funding and providing capital to players in the space and the ecosystem of micromobility, and how are you thinking about it for you with the CityWorks Challenge as well? So maybe if I start with you, Rene, Nassin, and then Thijn.
Now we see still opportunities in the last mile, although that part of the market is already further developed.
Yeah.
But the real focus for us right now is on safety. And safety means goes from protective gear to make cycling safer and getting more people over the hurdle to start using a bike or an e-kick scooter to move around. But also looking at things like V2X technologies, which are technologies where bikes can be seen by a car and vice versa. So that goes further down the drain. But safety is definitely a hot topic, and that is something where I expect in the next year there will be a lot of capital deployed, and we are definitely looking in that area specifically.
Can I ask just a clarifying question on that? So of the stuff that you say is safety, what so V2X, can you just explain that part?
V2X is a new chip-to-chipset technology where if it's installed in the car, it can see bikes up to 100 meters around the bike.
Right.
And what it does, if the bike gets close to the car, the door can't open or the car can turn right.
Right.
For example.
Yep.
So this is a really an item that will significantly enhance security.
And you
it's
think
very
that...
early stage because it's a chicken and egg situation.
Yeah, totally.
In both situations, but that will come. And with that technology in place, we expect there will be a lot of applications being developed on top of this technology-based technology that will be deployed.
Yeah, excellent. And that you think that will just be a piece of material, like a chip that'll go into every bike that's made? Is that what you see? That
ultimately, I see that happening. Yes,
okay.
Correct. I'm talking 10 years down.
Sure.
Yeah,
sure.
So it's a long-term investment.
Great. Okay. Thanks. Yeah. Listen.
So as you know, we have a very specific opportunity open. So I'm going to speak to that. So this is the Sustainable Cities Challenge. And cities actually came to us with their problems. So they are the problem owners for this. And we have 3 cities right now. I'll focus in on Venice because that's the most relevant to micromobility. And the city of Venice has invested a lot in their sustainable infrastructure. So there's a lot of infrastructure available for bikes, great bike lanes, definitely lots of micromobility options out there. But the people in the city, the residents, they just aren't using it. So they're looking for innovators to come in and help increase the adoption and the use of those sustainable mobility options. And you'll notice that I'm speaking a lot about what we want innovators to do, and I'm talking about the impact, but not really about how innovators should go about this. And that's because we're actually agnostic about the how. We are looking for innovation. We're looking for the ideas that you have. We're looking for innovators who are maybe working in another country or another space and want to pivot and try something out in Venice. So how you do it, whether you are looking to partner with businesses, whether you're looking at data, AI, augmented reality, even community engagement, these are all options that we're open to. And then in terms of the profile of the innovators and the companies, that's also really open. We're looking for early stage, for later stage. There are many reasons why you could participate in this type of challenge, from the networks and connections to the funding, which will help you actually test and develop these types of solutions.
Excellent. Okay. Thank you very much. Thijn.
I think your question was also a bit sort of what makes me excited about what's next, right?
Yeah,
That's
totally.
the,
Like what's the stuff that you are pumped about?
Yeah, so maybe when I'm thinking about micromobility, I think, in mobility, basically you sort of have micro and you have automotive, right? Or at least those are, you can roughly separate those two.
Sure.
And I think automotive for the next couple of years, and you see it everywhere, will be distracted by autonomous driving. Like automotive is all about autonomous driving. They will be fully focused on that. And I think that I'm pretty excited about it allows a lot of opportunity for micro to focus about actually making micro just the best solutions in the cities. Because the positive thing, and I know that sort of you said like, yeah, it's maybe not that sexy, and people say, yes, the demand for e-bikes is deteriorating. Yes. But also right now, there are still every day in the Netherlands, for instance, more e-bikes sold than normal bikes.
Yep.
So sure, it's deteriorating, but the growth is deteriorating. That doesn't mean there are less e-bikes sold, right? So I think the cities are embracing that already. The cities are embracing micro. Use the next couple of years while automotive is distracted with autonomous driving to really build those integrated solutions. And I've spoken to actually a couple of companies already here at the expo. I've spoken to the guys at Swell Electric that do induction charging, and you're talking about Magic Lane, indeed, that sort of makes navigation suddenly really available to those to basically hardware of a Raspberry Pi Zero.
Yeah.
So suddenly all these things accumulate into really good solutions. So if I was a startup founder sort of building something in America, I would really focus on that. Use the time to combine all those things. Actually just think, okay, people are accepting that micro is a thing in the cities. Now I'm just going to provide the best experience, and don't compromise on the cheapest or don't try to really give the best experience, because people still now will always be paying for the best experiences.
Yeah. One thing that I note has been that pre-revenue hardware until date has been, like, I think in the last 2 years, it's just gone through this like brutal period where it's been very challenging for anybody to really get any funding. You've obviously launched a fund in this space. Has that been something that you think has historically been undervalued, or that we're at an inflection point and this is about to take off?
Well, obviously valuations are completely different than 3 years ago. So actually from an investor point of view, this is a very good moment to start in that market.
Yeah.
And there's a lot of companies looking for funding, so we can be very selective and looking for the winners of tomorrow.
Mm-hmm.
So it's a great opportunity right now to be in that market.
Yeah. One thing I also want to come back to you with, Thijn, is so you mentioned autonomous driving is like going to be capturing the automotive. Is anybody here excited about autonomous in micromobility, or is this a pipe dream 10 years away?
We're not looking into that.
You're not looking at that. Okay. Where are you at, Nassin?
There might be space for that.
Okay.
Definitely in the cities, they're quite excited about the new technologies that are out there and how it could improve safety. And in terms of connecting, like last mile connectivity, making that more affordable and more accessible to people. So it's not something that we're doing in our challenge, but it's something that is interesting to us and to cities in general.
Excellent. Okay.
I think full autonomous right now, I don't see it. That's maybe 10 years in that.
Yep.
But that doesn't mean that autonomous solutions can't be integrated. You already hear that people were always talking about ADAS, right? Advanced Driver Assistance Systems. And now you're talking about ARAS, Advanced Rider Assistance Systems, right? So we're already talking about why not have, I think all e-mopeds, for instance, are already, how do you call it again? Have the that when a car breaks in front of you, that your vehicle
like
actually,
ADAS.
ADAS, yes.
Yeah.
That's already a fact, like that already exists. But also think about the use case. Hey, I park my e-bike here. Maybe it parks itself. Like those use cases will be way sooner. The technology is already there. And I think people are also underestimating how useful that is. Way more useful in micro even than with automotive.
Yeah. I'm very bullish on autonomous in micro. I think it's going to be, or certainly like steps towards that, right? Like ADAS and other mechanisms that help and assist riders who are maybe on 2-wheelers or 3-wheelers, being able to like relocate themselves around. What's the stuff that's not getting funded? Like if you're obviously talking VC, there's a couple of VCs. I know that this is like a brutal talk, but I do actually think it's relevant, which is there is stuff that's out there that, the stuff that's very challenging to get funded at the moment. And I'm just who wants to say that question? I can tell you what I think, but yeah.
Obviously, in e-bikes and all the sectors where the last 3 years investors got burned are very hard to get funding for right now.
Yep.
If you have something in that space, you need to have something truly unique.
Yeah.
I think that changed from 3 years ago.
Yep. Do you think that that's for like new companies that are coming up? And yeah, okay. Yeah, I hear you. Yep. All right.
Yeah. Do you want to?
Do you have anything on the
Well, I'm not a funder. I could talk about my specific challenge.
Sure.
And
Yep.
what might not get funded. So we're looking for solutions that have a really strong human-centered design. So if you're not working with communities, if you're not making those connections, you're probably not going to get funding. And like I said, our challenge is probably the most open out of all of the ones here. We're really lowering the barrier to entry. So we're pretty open, but there are a few things that we are looking for. And so impact, being able to make connections, build relationships, those are all things that we're looking for.
Excellent. Thank you.
Yeah. I think I already sort of spilled some beans on the topic, but I think I agree with what Rene is saying, that it's very hard right now if you're just banking on the sort of the old-fashioned trends or the old-fashioned trends. Hey, EV is a trend, so we're building the next e-bike, but nothing more special than that. That's very hard to fund. Like hardware manufacturing has always been hard to fund, I guess. But the positive thing is there are a lot of more funding options available. So, for instance, if you are in hardware manufacturing, show me that you thought about how are you using your capital. So how it would be fundable again for us, for instance, is, hey, I have a very asset-heavy business, but I've managed to get this lease company to at least talk with me if you, investor, will also give a guarantee or something, because then you're not using the equity to grow, but you have an asset lease facility to figure out that out. There's lots of money going into those projects. Yeah, so I'm trying to pivot your question a bit to solve the unfundable thing.
This is exactly where I want to go as well, which is like, I think one of the things that we've seen, right, is like VC in particular has been, they will go chase the new shiny thing. And I say that as a reformed VC, AI, everything, woohoo, it's going to be fun. But like in the unsexy space, there's still a huge market that's available clearly in micromobility. We can see it in the growth. We can see it. So what are the alternative mechanisms for being able to fund it? And I'd be super curious for any of you if you've seen innovative ways to see companies make it through that valley of death to be able to get to early stage. Like what are the alternative funding mechanisms? And I'm just curious if you've seen anything or you've been impressed by anything in your travels.
There's in Europe, there are quite some countries where banks provide additional financing when you do an equity round, so that you can double the equity or double the cash you get in the company. That is very interesting. But an area of cash which is very often overlooked is your supply base. So if you start growing a company and you have very short payment terms with your suppliers, you keep needing cash. And if you discuss with your suppliers way longer payment terms, you can actually grow a business without needing more cash, actually generating a lot of cash. So when we get into a company, one of the first things we work with the team is to get those terms to as long possible scale to make sure that when the pickup is there, then the cash needs are significantly less. And it sounds trivial, a 30 or 60-day payment term, but do your Excel exercise and you'll see how much difference that's going to make.
Yep. Excellent. Okay. Nassin, did you have anything that you think of that's top of mind?
I think just exploring alternative funds like ours. I mean, we're not really a fund, but different types of programs out there, in particular, building those relationships, like I mentioned, with organizations like us, like the Toyota Mobility Foundation in various cities. I think that could be a route into funding and exploring different grant funding from governments and so on.
Yeah. One of the things that I've seen quite successfully navigated is a lot of engineering innovation funding that's oftentimes been able to help provide buffer for hardware companies that are in that period, right? They've got a product, they think that they need to get through for maybe 6 months or a year to be able to get themselves to production. And that's been really interesting. I know that it's actually a lot more available in the US, in EU and the UK than it has been in a lot of other countries.
Especially at the European level.
Yeah.
There's good funding opportunities from grants for in the UK and Denmark and Holland, for example, Belgium. But there's also the European level. There are a lot of funds available. You just have to find them. It's not easy to get to the right desk, but there are significant opportunities there for hardware and software companies to get funding there, or grants, or loans.
Excellent. Thijn, anything that you've got that you've seen?
No, I think you guys are already really touching on the most important points. There is especially in Europe, there's just a lot of money available as long from banks, from grants, from local governments, right? I don't count them out. There are huge programs. The city of Amsterdam is investing a lot of money to just make stuff work. So as long as you can explain why you're adhering to their principles or to their goals, but also think about MasterCard Foundation, for instance, is also really generous. Like you can
the MasterCard Foundation.
Yeah, so you have a couple of these institutions. So if I were you guys and you need to get alternative funding and that, I would really explore that, because nothing makes an investor more happy that you said sort of, hey, I actually already got a grant for $1 million. And if you call it non-dilutive capital, then your investor really thinks you're smart. So and maybe the other one, and it's maybe a bit more obvious, but it's crowdfunding. Look at Fastnet. Fastnet has been majorly successful with crowdfunding, and then sometimes investors call it jokingly clown funding, because the people that are investing actually don't get that like the terms for them is pretty shitty, like valuation probably. But for founders, that's great, right? Like that's not a and the negative thing of crowdfunding obviously is you don't you get money, but you don't get smart money. You don't get an advisor, you don't get help from your VC, but it's still money you're getting. So like it's helpful, and I think a lot of people get horror stories about crowdfunding. Yeah, but you have 500 LPs to deal with. You don't really. Like if you structure it well, you have zero obligations to attest to them. Only crowdfunding works best if you have a consumer-facing brand.
Yeah.
So that's the thing. But even, especially if you're developing a new type of hardware thingy, then also crowdfunding can be pretty... And then also, what I like about the idea of crowdfunding is just you have a product, you already have your first customers. So not only did you get your first revenue in, but you also have your beta group. And then also you can set up a WhatsApp group with these people, really get testing going. So then you can also show a lot of analyses to your VCs, because again, that's also changing. Think how a VC now values a case is so much more data driven than even 2 years ago.
Yeah.
So if you can get that data set, they also are way more fundable afterwards.
Yeah.
So I think there are actually a lot of opportunities and a lot of things you can explore. And then as a VC, I think you know that. So you also expect founders to explore that, right? So you get credits if you do, and you get discredits if you don't.
Yes. Yeah, absolutely. Well, look, we've only got about a minute and a half left. I'd love to just conclude, which is, say, for example, there's a founder in the audience who's thinking about getting their company funded. You've got 30 seconds. What's the pitch for you on why they should take VC over not taking VC?
In our case, if you want smart money, you should come to us. We are trying to not only invest in cash in the company, we're trying to help it to succeed. And building a company is not easy. I mean, we all the three of us have done that, but it's very rewarding. And you definitely should not be hesitating to ask for help. Help is going to make a difference in succeeding and not succeeding. So I wish you all good luck with your companies.
Excellent. Nassin?
Actually can't think of a reason why you shouldn't enter a challenge prize or an open innovation challenge, because it does de-risk that whole process for you. If you're entering a new market, you're developing something new, participating in a program like this, especially if our goals are aligned with your goals, can really help de-risk that whole process for you and take you along on that journey. And all we're really looking for is that you have an idea you believe in, you're passionate about it, it seems like it's going to create impact. Definitely take a look at ChallengeWorks and hope I get some applications from this.
Excellent. Thank you. Thijn?
Yeah, I think, as Rene and you also, Nassim, what rightfully said, the good thing about VC is that they'll help you out with stuff. I think what the actual biggest benefit of VCs or a cap table is the fact that a lot of startups just struggle with the same stuff. So we see, we have 15 companies in our portfolio, so we see the same mistakes being repeated all the time, and we can actually help you prevent those mistakes. So sure, everybody promise you nice leads and big intros, and sometimes you get them and sometimes you don't, right? But I think the big value is you're sort of entering a community of entrepreneurship, and I think that's the big value add. And I would 100% also write into your challenges, because I think that also in the long run makes you more fundamental for VC. So
Fantastic. Excellent. All right, folks. Well, please join me in thanking our wonderful panelists, and hope you enjoyed that.